We have our ability to eat our own, make our own food. We have the ability to energize ourselves. And we have a fairly diverse, what I would call geography for climate. Okay, so areas, one bad harvest area doesn't take the United States down. It must be multiple. And so I'm not saying there won't be stress, but what I am saying is that money will flow into the United States, the dollar will be strengthened, and then people are going to get to the point saying we don't want any of these currencies. Then it's going to have to be gold and silver. But my view on the whole thing, Dave, is that they'll reprice gold, they'll reprice silver.
Unemployment has surged in the United States in response to the lockdowns. Never before in U.S. history have we seen unemployment rise this quickly. And as the economy slowly reopens, the future is still uncertain. And this is where Trade Genius Academy comes in. They'll teach anybody willing to learn how to go from complete beginner in cryptocurrency, binary options, or stock market to find a path and ways to make money just like trading pros. And if you've never traded before and want to learn, you can take advantage of the market when it goes up and down, exactly like these times we're experiencing. Sign up for one of many Trade Genius online educational courses. Discover the lucrative world of trading. Receive personal coaching from Bob Kudla and Philip Cleaver of Trade Genius. And right now, during the month of July, you can use the promo code FREEDOM for a whopping 40% off all non-bundled items. TradeGeniusAcademy.com. The link's in the description box below. And on with the interview.
Good afternoon, everyone. As always, one of my favorites to talk to about economy, crypto, metals, commodities, and everything in between, the state of our world and how he and I both think things might be moving. Although we disagree sometimes, we do agree sometimes too. And I think today you're going to get a lot of value out of what we talk about. As we've seen over this last month since we did our last interview, gold's popped up to all-time highs. We have crypto running, things like Chainlink, for example, jumping up. Looking across the commodities that we eat every day, we start to see the locusts crushing and out well into Asia, into India, and China's trying to push them off a little bit. But China's so terrified of not only the decoupling of the Hong Kong dollar peg, but at the same time, these 100-year floods they're having, where instead of overtopping the dams, they're pushing all the water out into the farm fields, which led to the second largest corn purchase in history from China just last week. There's a lot to discuss. There's a lot going on. And I'm sure Bob has a little bit different take than I do because, they think I'm a little more doomy and gloomy. But I always find the opportunities in the danger. And Bob, thanks for joining us today. Hope everybody gets something out of our talk.
Yeah, Dave, well, no worries. I think you and I are probably in agreement more than we're not. But, look, somebody has to wake people up. So you're doing a great service. And look, let's talk China first before we get into everything else. They build a dam for a 100-year flood, they're going to get a 500-year flood. So I think they're in deep weeds. And what really caught my attention was the bridge that survived for 800 years from the Song Dynasty. The Chinese Communist government has done the unbelievable. They destroyed it through their ineptitude, in terms of all this water they're just dumping. They have to dump this water because they're scared that this dam may go. If this dam goes, you're talking 400 million people. I made a joke on another show a couple weeks ago, and I said wormwood is coming. Now, that's a biblical prophetic statement, and people were like, when's that going to happen? I said, I was kidding, but that's when the water gets basically poisoned for a third of the world. Literally 400 million people would be displaced, and nobody's going to survive that around the world. It would cause absolutely a worldwide calamity because we're so interconnected. So let's talk China. And because what's happening in China with Hong Kong, with the dollar shortage, with the depegging, it's going to all circle back, and it's going to cause a lot of stress on our market. In fact, we'll see the Chinese will be forcing deflation into the Western economies if this thing really happens. And Trump's pushing for it too. If you notice, the dollar's been down for the last 4 weeks. That's not by accident. They're preparing for this peg to go sideways, okay? And that'll strengthen the dollar and really cause our market some great stress. At the same time, and you know, I don't know if you and I talked about this, but you know, they always talk about how much gold China has. How about those 400 tons of tungsten, whatever they dipped in gold for their collateral? And I think you saw that, you know, gold started popping. You know, gold is up over 54% from the last 14 months. Silver's up 76% from the March lows. Now, with silver, I agree with you and I talked before we got on. There's some other people that you follow and you do interviews with, really some smart fellas. And I agree that with silver should be trading at a 17-to-1 ratio. It's up until this week was trading at a 100-to-1 ratio, which is absurdly undervalued. And so my measured move for this thing to get through, not next week, but in the next 12 months, you know, we're going to be looking to push over $50 just to get it back to a normal range. That's the measured move of the breakout, but it's going to require gold to break out for it to do it. Now today, we're talking Monday, so I'm not sure exactly when this will go live, but Tesla pushed up to $1,800 a share and then sold off. And so Tesla is absurdly, grotesquely overvalued right now. And if that rolls over, it'll bring a lot of the markets down with it, and it will bring the miners and the metals down in sympathy. So we probably, with SLB hitting $18 today, we're probably going to push down a little bit. People do not fret. That's going to be a dip to buy, because our federal government's going to be coming in August, September, October, and they're going to be ladling out the stimulus, and then you'll see gold break out and silver break out, and then we'll get into $2,900 for gold, and we'll get into $26, $27 for silver.
And the new stimulus, I've seen some figures that are pushed around. They're going to just magically print another 3.7 trillion for this next round of stimulus, just out of thin air.
Yeah.
Now, you know, can you explain also, you know, you talked about deflation before inflation, you know, with the Chinese and the decoupling of the Hong Kong dollar, that's going to send ripples, tidal waves through financial markets because there's so much tied to Hong Kong. And I've traveled there dozens of times. I used to live in Taipei over in Taiwan. And anytime you would want to travel anywhere, even if you flew down to Thailand, if you weren't getting a direct flight, everything stopped in Hong Kong. So, you know, you have a fair few hours. They had the express train. You could go downtown, hop off, or if you had a day or two, you could book in there and then stay around. Super convenient, amazing place. There's so much money in business, commerce, banking, finance tied into that, along with the whole legal frame and structure. That's a lot of law offices were there as well, consulting firms. So this is all going to dissolve, if you will. And I heard already, I was talking to a couple of people in Taiwan over the weekend up in Taipei that are involved in finance, friends of mine. And they were talking that if it decouples, it's going to go to 70 to 1. And they're all trying to figure out how to position themselves and how to profit from the decoupling. But that's a 10x right away. And I thought, no, really? I would expect like a 10 to 1, 12 to 1, maybe double 14 to 1. And they're like, no, 70 to 1. And I was like, that's insane. Whoever had invested in property or whatever, and they would default on that, and the ripples coming through. We're talking about trillions of dollars worth of property values in Hong Kong as well. Most people would just walk away unless they would pay the property off with solid money. So if you had you know, again, it comes down to it. If you have an ounce of gold, an ounce of silver, doesn't matter. You're still trading at 70 to 1. If it's worth 18, it's 18 times 70 or 20 times 70 for that same piece of metal. And, you know, moving forward into this fall, I really believe we're going to see a lot of strangeness in monies, and people are going to start to realize that you can't print another 4 trillion, just, you know, like you said, spoon ladling it out and then expect us to believe that everything still has the same value. These absurd valuations in the markets today was at 1,800, was at Amazon at 3,000. I mean, how do you get to these prices without something be completely broken? And it's already seems it's going into hyperinflation. Like every time you go to the store, you're spending hundreds of dollars for just a minimal couple bags of groceries and a few knickknacks here and there. So you can already see the pricing is going into an inflation wave anyway. And this, once the confidence is lost, that's the whole thing, the confidence of the dollar US or the confidence of Hong Kong dollar. Once the confidence is gone and the mirrors are and the curtains are pulled back, it's going to just go and go and go.
Yeah, can I agree with you and disagree with you at the same time? The dollar eventually will will be worthless like every other fiat. But they'll be able to print $4 trillion without even sweating. The reason being is that the world has a dollar deficit right now. And as you talk about Hong Kong, all these defaulting of debts, they're defaulting in dollars. So they're going to have to keep pushing more and more dollars into the system. I think we talked about this before. When you're at 0% interest rate and you double your debt and you're paying interest only, are you paying any more for your money? You're not.
Not at 0%.
Exactly. So that's where we are. We're going to get to zero bound. They're going to print this thing. And like I said, I think you and I talked about this in day one. There's only one thing that's going to end this thing is when food prices get intolerable. Now they're going to get intolerable other places around the world before they come to the United States. I know we have a worldwide audience here, is that if you're not on a dollar peg, you're in big trouble. You better start hedging, and you probably already should have been hedging because gold and silver and copper and food are already at highs against your currency. Now, the United States has some unique advantages, is that we're the #1 military. We have relatively stable borders. I wouldn't worry too much about Mexico. We have our ability to eat our own, make our own food. We have the ability to energize ourselves. And we have a fairly diverse, what I would call geography for climate. Okay, so areas, one bad harvest area doesn't take the United States down. It must be multiple. And so I'm not saying there won't be stress, but what I am saying is that money will flow into the United States. The dollar will be strengthened, and then people are going to get to the point saying, we don't want any of these currencies. Now, then it's going to have to be gold and silver. But my view on the whole thing, Dave, is that they'll reprice gold, they'll reprice silver from what we're already collecting internally and say, okay, we're writing a check. Okay, we'll give our gold away at $70,000 an ounce. And then we wipe the debt out. I'm making that number up, but it's that high. And then that basically corresponds with the money supply growth that we've had over the last, since 1971. And so that's how they'll end it. And it'll be coordinated. The whole world will reset. It'll be a jubilee. And but in the meantime, a lot of people are going to suffer. So from a trade standpoint is that, and I've been a broken record with you forever, is that I'm buying gold miners on dips, I'm buying silver miners on dip, I'm buying copper miners on dip. I haven't messed around too much with the ETFs with food yet, but I'm very interested. I've been trading MOS, which is the ag chem company. So I think you'll see when some of these countries have to shove chemicals in to get their crop out of the ground, you're going to see like potash and companies that mine that are going to do extremely well. So that's where we are, and that's what we're trading. And in this last week, fantastic. We just closed a bunch of double-digit trades. I'm losing my voice. I've been talking all day. So
let me talk for a second here. Now, I understand that there's going to be a lot of money flows back to the U.S. The dollar's going to strengthen before it crashes. Do you think we'd see a dollar index at 150 or 160 like it had at the highs in the 80s before it would start to go down again? Because, everybody is going to go to that flight of safety. And since we're the bastion in the currency for that last bastion, well above the euro and whatnot, there'll be a lot of flows in here, but eventually that dam can only stay together so long before it breaks as well. But Do you think we'd see 150, 160 on the dollar index before something were to reverse itself?
Yeah, absolutely. Because look, the dollar, as trade collapses around the world, you need less dollars. So that the dollars that are out there are going to be strengthened. The debt that's denominated in dollars is going to default. So that'll absolutely drive the dollar sky high, far more than anybody imagines. And that's also going to make the trade balances even crazier because we'll have to continue to barrier trade because the currencies around the world are going to collapse against the dollar. And their problem is they're not going to be able to import our food. China's moving fast now because if that yuan starts to float, which it's going to have to when they run out of dollars, they're not going to be able to afford to buy food. It's going to be a really, really interesting situation. So I'm staying with my theme. And then also, we talk crypto, Bitcoin, Chainlink, bueno.
Yeah, I wanted to add one last point with the Chinese floods happening right now. So just as an example, so you understand, I'm going to use the Yangtze River because it's kind of the most documented, and we know what the flow through rates, what the floodgates are for the individual dams through there, and it's being heavily overflooded now. So this is just one river out of a dozen that the same thing's happening. So the Three Gorges Dam is discharging around 37,000 cubic meters, not feet, cubic meters per second on the flow through rate. Now upstream is where we saw these amazing floods where they have never opened this many floodgates before in the dams, and it's still overtopping bridges and this sort of thing. Now that's all backing up behind the Three Gorges Dam, and so far it's able to handle it. But the problem is that they're not talking about in the news that you should keep your eye on. This is going to push the food price. It's further downstream there. After the Three Gorges Dam, think about that, 37,000 cubic meters per second is a flow through rate, but the next dam down there, their highest is like 21,000 cubic meters per second. So the Three Gorges is full drain right now, but the other dams can't handle that much going downstream. So what they're doing, instead of allowing those dams to overtop, is they're opening all the flood sluices out to the farm fields and allowing those levees to collapse and roll straight out into the farms in the countryside. The amount of flooding on these helicopter views was as vast or more vast than the Nebraska floods that were the biggest floods in American history that really put a dent into our agriculture last year. This is happening now in China, and it's ongoing, and it doesn't look like it's going to stop anytime soon. They still have weeks of backup of flood waters that they need to let out. They're going to lose their crops. They're already starting to lose. So when you see this panic buy from China coming in, would it be the first? Probably not. There'll be a second and then a third and then a fourth. But at what point do we wake up and go, oops, America had bad planting. China just lost almost everything. Brazil's eaten by locusts. India is being eaten by locusts. And everywhere you look, there's tumultuous growing conditions. And, you know, keep your eye on China. This will be the catalyst for the rising food prices. And then if we could see a switch over to crypto, there's got to be intertwined here how the switch is going to happen from what we know as currency and dollars, whatever, over into something in a usable hybrid of, could be Chainlink. It seems like that's one that has been chosen along with XRP and the Ripple net to go out and facilitate these transfers that we do now with wires and SWIFT system.
Yeah, but if you're speculating, stay with Chainlink, XRP centralized.
Well, it's just the one that's risen. You know, and reading about Chainlink too over the last year on how it was going to be integrated into not only the COVID passport, and you could put an enormous amount of medical information in this, but also with the instant transfers and the distributed ledger settlements. And it was already kind of built in as the everyday buy a stick of gum types of transfers that could be used on the speed and the integration through Oracle and IBM. They'd already facilitated all this to push through, and then coupling with XRP also in settlements. And then you started to see this little tiny something bubbling up, and wow, it's here now. And it is for real, it seems, because when you have this much industry of 300 large companies and Fortune 5s behind it wanting to use it and integrate it as part of their base for settlements amongst each other and for consumers like you and I to purchase through to settle on their accounts receivable, it goes into a whole different frame here where it's actually legitimate now. So I could see why these prices are rising. But what's your take on it? You really think it's a flash in the pan like we saw 2017 with all the ICOs, things bouncing up and crashing down? Or do you think it's got legs? Or how would you think about trading it moving forward?
Yeah, I know Bitcoin's going to be fine.
Yeah, fine. For sure it will.
It's going to be fine. And we trade those. So, and we don't, you know, what's kind of weird is that we're up on all the news, but only price pays. And we have the ribbon system that when we see the crossovers for it to move up, we just simply buy. You and I were talking about ahead of time and saying, yeah, I don't have to even be in front of my computer. You get set alerts in the system. Then you just get on your phone and make the trade. So that's all we really care about. I'm a decentralized guy. I don't like centralized coin because I don't know what XRP's value proposition is if the Fed comes out with Fed coin, right? Because they'll just simply replace them. And XRP has shown us in the past that they can produce as many tokens as they desire. So there's no what do you call scarcity with it, you know? So hey, we're having a lot of things going. We'll just throw more of them out there. You know, they're no different than the Fed. But cryptocurrency, absolutely. There's trades that are going to do really well. There's going to be really cool forex trades that you're going to be able to do, you know, against the dollar. And then, on the stock side, I think the tech stock thing is like I said, obnoxiously overvalued. The top 10 companies are 90% of the market growth. I mean, when that rolls over, it'll just send everything down. And now that the virus is not having the effect that it's supposed to have in scaring people, well, now they're going to scare them with the stock market crash. So the powers that be are always going to have something in front of people to freak them out.